The IRS is forcing companies to snitch on you. Once you receive $600 on any platform, whether it's Uber, Lyft, Instacart, you know what I mean, you're going to be reported to the IRS. Joke's on them though, because they didn't let you subscribe to me, and I am going to give you all the tax planning tools to prepare yourself, because in this year, 2023, oh, it's on. They're going to start reporting in this year, y'all. So we want to make sure that we are prepared. So we're going to go over the best tax deductions, small business tax credits, and all these goodies to make sure that you are getting the most bang for your buck. And you might end up paying less taxes, because if you know, W-2 employees pay the most taxes. First, let's address some administrative things. Because this is a new tax rule and the IRS plans on hiring 80,000 IRS agents throughout the next few years, they're going to be auditing more. And if you're going to start making this a business, you want to have everything nice and clean. It is a nightmare to go through your personal card looking for business expenses, okay? That's a no. You're going to go to the IRS website and you're going to get an EIN number, employer identification number, that is free to get. You get that pretty much instantly, if I can remember or not. Like, you'll fill out the information, it's free, and you'll get an email with your EIN number. Like that. Then you're going to use that EIN number to go open up a separate bank account for your business. Bonus points if you can open up a debit card, a savings, and a credit card at the same time. So when I was going through this, I actually went through Chase, and they offered, while they were already pulling my credit, to just go ahead and run to see if I can get eligible for a credit card, right? So I ended up getting an instant approval of $7,000 for my business. And I didn't even go in there expecting that, right? So that was great. And I'll leave a link to the card that I use in particular below, because you might get even more than that, right? It just depends on your credit history and things like that. And then once you're using this EIN and building credit through this EIN, you're going to have some business credit built up, right? So then eventually you'll reach a point where you don't have to even use your own credit. We're going to keep our social security numbers safe, and we're going to use the company's social security number, their EIN, instead. Once you have about 2 years of consistent revenue in your business, you will not have to use your social security number anymore. Okay? Pro tip. All right, let's get to the good stuff now, all right? So I want to start here because this is something that nobody really talks about, but it's really, really important. Cash basis versus accrual basis. When you file your taxes, they're going to ask you, if you have a small business, do you want to use cash basis or accrual basis? Now, depending on what industry you're in and how your money works, picking one over the other can save you a lot of taxes. I personally saved $7,000 in taxes by using what I'm about to explain here. And I want to preface all of this by saying, obviously, I'm a CPA, but I'm not your particular CPA, so run this by your CPA. But if there is a lag between when you perform the work versus when you actually receive the money, or if you're somebody who pays things in advance, right? So let's say maybe you have Amazon Prime or something, and you do the annual because you know you save money that way, right? So if you're prepaying expenses, because you normally pay for that for the year, right? But the whole year hasn't actually happened yet. But if you're doing something like that, again, cash basis will be your friend. And the reason for that is because of timing. So for my personal example, I'm cash basis. I do a lot of content creating online, right? I might sign a contract in November, but not get paid until January or February of the next year. That's a whole separate video on how crazy that is. But basically, because I'm cash basis, I don't have to claim that revenue. That revenue does belong in 2022, for example, but I didn't receive it until 2023. And because I'm doing a cash basis, if I didn't receive that cash, I cannot pay tax on it, babe. Okay? Cash basis. You want to pick that if there is a lag or if you pay for things ahead of time. Now, conversely, the accrual method is pretty much the exact opposite. So accrual is good for those who get paid right on time, or maybe they get paid in advance, right? So maybe you're doing like some sort of graphic design work or some sort of, I don't know, construction work, and you get paid upfront a certain amount. Maybe you're like, look, I'm nothing like Crystal. You can get paid 3 months or 4 months out if you want to. I want to get paid now. Accrual would say, hey, this person did get the money now, but they had to perform those services across the next 12 months. So they're not going to actually claim all that money now, even though the money is in your possession. Or let's say you have expenses, but you don't pay them immediately. Let's say you need some materials, right? But your suppliers say, hey, you could pay me in 45 days, right? Accrual method lets you say, hey, I haven't really paid this yet, but I'm going to go ahead and claim that anyway, because it applies to this tax year. Okay. So depending on what kind of business you have, you might benefit from one way or the other. Okay. It's important to note though that this is more of like a timing benefit. So you still have to end up paying the taxes. But for me, for example, I had a windfall of money I was not really expecting in Q4 of 2022. And it was nice to not have to pay taxes on that and actually be able to tax plan, right? Do some of the things I'm going to tell you so I can reduce my tax liability. Tax planning is more important than tax preparation. You see, everybody wants to bomb rush their tax preparer at the end or or the beginning of the year saying, help me reduce my, my taxable income, right? But the real tax savings happens throughout the year. You need to know certain credits so you can actually act on them, because in December is too late in some cases. You are going to record everything. I want you to be as petty as you can be, baby. They're forcing you to record your income, but you're also going to record your expenses, okay? And a lot of times, depending on where you're at in the business cycle, you could end up spending more than you're actually making, right? Especially if you're somebody who's just starting out. Maybe you're buying new computers, you're buying new microphones, whatever the case is, right? You're gonna have expenses that you can actually front load. So for example, let's say you're doing Uber, Instacart, or something like this. What about the phone bill, right? Your phone bill is now deductible because you need the phone to actually get to these people, right? To get to your customers, okay? You need internet at your house so you can review your money, right? Maybe you're on the app at home. Maybe you have an office and a little space where you actually come down and figure out how much money you've made in your business, right? These are all tax deductible. The lights that you're using. If you got a new phone, right? You need the phone for the business. You can deduct anything that is essential and necessary. All these expenses are necessary for you to be an Uber driver. And honestly, for a lot of small businesses, right? These are small business tax deductions that you can use no matter what the industry is that you're in. Depending on how expensive certain things are, you can actually accelerate depreciation. So if I were to buy a new computer or a new phone as a personal person, that's it, right? That money is totally just wasted. I don't get any tax benefit from that. But as a business owner, you can deduct this from your income. All right. And because there's special depreciation rules, you can deduct things like your computer, your microphone, all in one. Certain times you might have to break that up across a couple of years, right? Like 5 years, 10 years, 30 years if you're doing real estate. But when you're using bonus appreciation and 179 depreciation, this is a little bit more technical, right? But when you're doing those those accelerated depreciations, you can actually write off your entire computer all in one swoop, right? So hey, $2,000 computer, I needed that for my $600 business, right? Now you made a loss, which can actually reduce your W-2 wages. So if you're a W-2 earner, a regular employee, and you have a loss in your side hustle business, it can offset your W-2 income. Same thing with gas. If you're doing Facebook Marketplace and you're selling stuff and you have to drive to these people to meet them, right? You can deduct all the wear and tear on your car. Now, they have shortcuts for some of these things where you can charge it'll be I think it's 57 cents right now per mile. And that just simplifies everything. You don't have to keep track of how much gas you've been putting in the car and how much the maintenance costs and things like that. So there are shortcuts, so you don't have to really keep such great records. But just keep in mind, if you're using your car, that is something you can deduct as well. My Uber drivers, I'm talking directly to you. Anything that is going to educate you is tax deductible. If you want to learn how to become a better driver, right? Or let's say you're working and you offer services and you want to become better in sales. So you buy a sales course or you buy sales books. You're buying those things to directly benefit your business. They are deductible. For me, I'm a CPA. When I do anything for my licensing, I can deduct that because I need my CPA license. That's how I actually have authority to be on here with these videos, right? Because I am a CPA and I'm an active CPA. I'm deducting those fees. This one is my favorite because retirement accounts, all right? Why pay the IRS when you can pay yourself? What I like about the retirement accounts is that you can use these even after the tax year. So let's say you're doing your tax planning, you see, hey, I'm going to owe some money. You can put money into a retirement plan and that can actually reduce your taxes for the previous year. So if you're an entrepreneur, I would suggest doing some homework on the SEP IRA, the solo 401k, and the simple IRA. These all have different benefits or so. If you want a separate video on a deep dive on that, let me know. You can go on trips and have it tax deductible. Let's say you and a whole bunch of your Uber driving friends want to go to Cabo or go to Tulum to discuss how to become a better Uber driver. What snacks should I include? How can I provide the best service, right? How can I get a best 5-star rating, right? If you're going to go and discuss business, it is tax deductible, even if a portion of the trip is for personal use, right? But as a caveat here, I would say make sure that the majority of the trip is for business use, right? So maybe you're going to be there for 8 days, 6 days is business, 2 days is personal, or just keep it all business related, right? That way you can kind of get more deductions. But you're able to deduct your lodging, you're able to deduct certain meal expenses, right? You can deduct your hotel. All of these things that you would not be able to do if you did not have this business. And again, these things, they have certain limitations. If you are wondering how to file these taxes, it'll be your Schedule C. And if you're using something like TurboTax, they pretty much walk you through this. It's pretty straightforward if you ask me. So you can use that and it'll pretty much handhold you through the whole process. So all of a sudden we're able to enrich ourselves by getting magazines and courses and books to really enhance our knowledge. We're getting the latest tech to stay relevant. We're going on trips and we don't have to be hit with as much taxes because we did it the right way, the way they are trying to force us to do. So thank you, IRS. And if you're a sole proprietor, as I mentioned, even if you have an LLC, this can actually offset your W-2 income. So most people who are self-employed or have these small businesses, they don't necessarily get taxes taken from them, right? Yes, you're supposed to file your taxes quarterly, but let's say you didn't file your taxes quarterly, right? If you have a W-2 job and you paid a whole bunch of taxes in that W-2 job, it can offset the taxes that you owe in this business, right? So you might not ever end up even owing money because if you typically get a refund from your W-2 job, that refund would kind of pay for whatever taxes that you had to pay in your side hustle. And if you want some more tips on how to reduce your W-2 tax income, then definitely watch this video right here.